Hi everyone, welcome to Bytes. In today's video, we will understand about two most commonly used stock exchanges in India. The stock exchange is a marketplace where securities such as equities, bonds, REITs, ETFs are traded between investors or traders with the help of brokers. This is the structure of stock exchanges in India. SEBI, being the regulatory body in India, controls and regulates the overall security market in India. In India, we have national and regional exchanges. Most of the regional exchanges have been shut down because they were not able to cope up with the technology upgradations of electronic trading systems. During older days, all the securities were bought physically by contacting broker, and he used to buy or sell on behalf of us. Once Harshad Mehta scam was broken out, we started to depend on technology driven markets, which gave rise to NSE. As of today, most of the investors or traders use only national exchanges for buying or selling. The two most popular national exchanges are BSE, NSE. BSE. The full form of BSE is Bombay Stock Exchange. BSE is located at Dalal Street, Mumbai. BSE is the oldest and the first stock exchange in Asia. It was established in 1875 and formerly known as the Native Share and Stock Brokers Association. Only in 1986, the first equity index was introduced in India. What is an index? If we want to measure the economic performance of a country, one of the parameters we look into is the performance of the publicly listed companies of that country. There are roughly 5,400 publicly listed companies in BSE. To check financial performance of these 5,400 companies would be a very hard task, as financial reports are released on a quarterly basis. So to ease the process, they rank top companies based on market capitalization to create a specific index. This index is known as equity index, as this index constitutes only equities of various companies. The definition of equity index is as follows. It is a statistical indicator of changes in the market value of a certain group of shares or stocks. As explained, it serves as an indicator. In an index, based on the performance of a company, the price of company and index fluctuates. If a company is performing bad consistently over a period of say 6 months or a year, the stock might go out of the index and a better performing company might come into an index. This process is also known as index reconstitution. So, the first equity index was Sensex. It was introduced in 1986 by BSE. This is to provide a base for identifying the top 30 trading companies of Bombay Stock Exchange in more than 10 sectors. Apart from Sensex, there are other indices to track various sectors and themes. Other BSE indices includes BSE 100, BSE 200, BSE 500, mid cap, small cap, PSU, auto, pharma, FMCG and metal. The number 100, 200, 500 in the indices indicates top 100, 200, 500 companies listed in that exchange. The products offered by BSE includes equities, equity derivatives, commodities and currency derivatives. NSE. The full form of NSE is National Stock Exchange. NSE is very young compared to BSE, but still, it's one of the largest exchanges in the country. NSE came into picture in 1992 and was recognized as a stock exchange by SEBI in 1993 and commenced its operation in 1994. NSE is also located at Mumbai. In the year 1995-96, NSE launched Nifty 50 Index and commenced trading and settlement in dematerialized securities. Dematerialization is the process by which a client can get physical certificates converted into electronic balances. Nifty 50 index lists out 50 companies, top 50 companies which are traded on National Stock Exchange. There are around 1600 companies listed in National Stock Exchange. Apart from Nifty, other key indices include Nifty Next 50, Nifty 500, Nifty Mid Cap 150, Nifty Small Cap 250 and Nifty Mid Small Cap 400. The products offered by NSE includes equities, equity derivatives, commodities and currency derivatives. So, the final question is, which stock exchange one should opt for? We shall split into two categories. Firstly, people who are looking to buy or sell for long-term positional and swing trades. Most of the commonly traded companies are available in both NSE and BSE. All brokers trading terminal has an option to switch between NSE and BSE. For equity cash, usually there will be a small price difference between both the exchanges. We can buy the shares wherever the price is lower and similarly we can sell the shares wherever price is higher. For equity derivatives such as positions in futures and options, I would suggest to go with NSE as it's the fourth largest derivatives traded stock exchange. Second category of people is intraday traders. For equity cash and derivatives, I would suggest to trade in NSE as the liquidity of the shares is higher in NSE when compared to BSE. So, to conclude, we learnt about National Stock Exchange, Bombay Stock Exchange, which are two commonly used national exchanges in India. Also, we learnt about what is equity index, index reconstitution and dematerialization. If you have any queries, do comment below. I will read every comment and solve your queries. If you like our content, hit the like button. If you are visiting our channel for the first time, subscribe to our channel and press the all notification bell icon so that you won't miss any of our future videos. See you next time with another interesting video. Thank you, take care and bye.